Just talking, Hello, everybody, once again. I should say, ladies and gentlemen, boils and ghouls, welcome to another version of the Dapper Dividends YouTube channel. We got our good friend Craig, SCHD Stan here. Why am I talking like this? Hey, football is in full effect today. I can't do it, man. I can't do it. Hello, everybody. Hello, Craig. Say whatever you want to say.
Hello, good evening. Welcome to the show.
We're ready and available to field your questions, calls, comments, and concerns. So go ahead, fire away. Say anything that's on your mind. I really don't care. We're here for an hour hanging out with you. And a certain team from Chicago happened to win their home opener today, but Caleb Williams, the first overall draft pick, what an awful day. Let me tell you, this guy, I played him on my fantasy team. He just stunk up the joint. Awful. Craig, let's hand it to you. Have we bored everybody yet with our football talk?
Yeah, we won't talk too much about football, but it was a good day. We're both happy that football's back, and I'm sure a lot of you are, and some of you might not be, or don't care either way, but I'm happy.
Moneymaker. Next Star Media Group is happy that they're back because, dude, that's a lot of their channels that they are able to own and in partnership with the NFL, so they get they get.
I got to tell you, Russ, I'm turning into going back to some of my like trading days because I bought some Nexstar, sold it already. It jumped up a lot. I bought it on a low and it went up. I can't remember what I bought it. I bought it pretty low and it jumped up to like 170 something and. Nah, I'm good, man. That was good.
Yeah. We it's funny. Nexstar, if anyone looks at a chart going back about a year, it ping pongs between the low 160s, high 150s, and the low 180s, and three times, Craig. When it hits the low 180s, I'm like, I think I should sell my entire position and then just wait about a month and buy it back in 160. I know the time I do that. It's going to just keep going up and up and up. So,
you do the right thing. You know the stock, you follow it. Just hang on. Unless the story changes for you, you're good. But like, I bought it because of you like it. So I bought it because of you. Well, I looked into it myself, but mostly because of you. And then that made me look into it. But I'm not following it. So when I had a good gain, I was up, 20 some percent. I'm like, why not? Like, why am I holding this? And I saw some other good opportunities. Other things were there, and I said, let me just take this money and run. And, I don't think you can get, like, everyone's at a different point with their investment and with knowing a certain investment, right? Like, for you, it's a long term. For me, I wasn't ready to do all the homework on it, and I got 20%. That's all right.
That's what I'm trying to do. So I want to say hello, Puck Man. Greetings from Southwest Florida. So he's on your neck of the woods.
I'm in Southeast Florida.
Yeah. Oh, here we go. And then Pat says he's on. They winter on Don Pedro Island. Pat, look at you. Do you know where Don Pedro Island is, Craig?
No, I don't.
Or, I'm sorry, Stan.
No, Craig, that's good. I don't know where Don Pedro Island. I'm sure it's near like Fort Myers and Port Charlotte and all that area. I bet.
All right, we got a good spread. Shannon from Atlanta, Hotlanta, Georgia. And then Rick turned his drip on for EPD today. Yeah, it's been fun. It's been a fun ride in a week. Man, it's gone. I put out a video and a newsletter, and I know you hold EPD, so I'd love your thoughts. Hold that thought for a second. Let me get caught up here. I don't want to get too far behind because I have a tendency to do that. But anyway, Rick, where do you hold EPD? Let us know. Let's see if you're making the same mistake that I did. We got Alan in the house, man, coming at you from Ohio. Hey, I don't know if you're a Browns fan, if you're a Bengals fan, either one, maybe none of those, but they both lost. They both lost today. But it's okay. They'll play again, right? All right, they were almost caught up here. I think, Steve, did you say you want to look at UGI? I think UGI owned AmeriGas. That's I think they were talking about selling it off. I don't know if they did that. A couple more. Oh, look at this. Janice, I like this. I know she, let's see. Janice, she's from up there in Wisconsin. And all I got to say about you and you Packer fans, I got this allergy, and my allergy is to the Packers. It's to Green Bay. So I can tolerate the Eagles. They got A.J. Brown, Dallas Goedert. They got Jalen Hurts. Look out, coming at you, Saquon Barkley. They got Devonta Smith. They got all these guys. They're one of the teams to beat up there and over there in I can't do it anymore.
And they just beat the Packers. That's why I was doing that. They just beat them.
Yes. Thank you. So, what is that? The enemy of my enemy is my friend.
There you go.
But you're no enemy, Craig. All right, so let's back out track, because this could just turn into football talk, and we don't want to alienate a lot of people like Shamir up there in Canada. You guys got some sort of football. I don't know what's going on. The field's all goofy, and they got.
Beautiful. I saw John Jay say Argos. That's Toronto. The Toronto Argonauts.
Argonauts. Yeah.
I love it. Thanks, John. That was my team in Canada, or is my team.
All right. Alan came across Alcon today, and it looks like it's doing well. Do you know much about it? So it's in the medical sector. It doesn't. Alcon, I think, has eye care pharmaceuticals. I think. Are they a competitor, maybe to Harrow Incorporated? We'll get to that. Okay, there's Rick. He holds EPD in the taxable. Good boy, Rick. You're doing it right. And now I guess Craig, because I'm just about caught up. So, do you hold EPD in a taxable or in a tax advantaged account?
Yeah, taxable. That stuff that you just learned, I had heard that before I started investing in it, and so I did put it in the right place, and it's been good to me. And the K1 that comes with it, it's. The only problem with me with it is the K1 takes a long time. It's delayed, so it makes you wait. And honestly, I do my taxes, I finish them, and then I go back and revise them afterwards. It's not the stuff on the form. It's important, but it doesn't change your return if you're not selling. If you haven't sold it, from what I can understand. So again, this isn't tax advice. It's just what I do. But people get worried about the K1, but that's the problem. It comes late. It's a little bit more confusing than doing regular taxes, but you can figure it out if you're doing yourself, or your tax person can figure it out pretty easy. Not that big.
Yeah. So if you're just holding, you're not selling, because from what I understand, they're just all the taxes are deferred. They're past everything is taxed later. Like, you're eventually going to pay taxes. You either pay it on the front end or the back end. And with companies like EPD, because of their corporate structure, they're not paying any taxes at the corporate level. So the way the government collects, though, it's weird. They don't want their taxes now, only when the unit holders, right? They don't even call it shareholders, but when the unit holders end up selling, that is when you pay taxes. Or if your cost basis goes to below zero. So like I think I said in the video, if your cost basis is $20 and you get $20 worth of distributions and it lowers your cost basis to zero, then all of the distributions you have to start paying income tax on that. So yeah, it's a little bit to learn. It's a little bit to,
and what's really cool about it is, though, you can pass it on to your kids. You can pass it on and they can continue. So when you pass it on to them, their price now goes up to the price on at that time. So it defers the taxes even further. So you can continue to do that. If they pass it on their kids, they can continue to keep deferring the taxes. And you're not continuing to lower your cost average, because as you get your dividend, it lowers your cost average. So you end up paying that difference when you sell. A little confusing, but when you pass it up, that cost average gets stepped up to the present day. So you gain all that back. So it's really pretty interesting. And it has a really nice yield. Like, it's usually around 7%, and it grows at 4 or 5, 6% a year, and it's very steady, very, very safe. It's a nice long-term hold that just stabilizes your portfolio, and it's nice.
Yeah, that's nice, man. When you kick the bucket, it steps up. Yeah. So if your cost basis was $4 a share, when current research shows that you're going to die. I hate to break the news to you, but could be wrong, but
just you're going to die.
Yeah. So if it's $30, then their cost basis is now $30. So clock starts over. And some of the research I found, people say if you drip you reinvest the distributions, then that keeps helping to increase your cost basis, so you stay further away from that zero threshold. So yeah, it's kind of interesting. Let us know if you guys invest in that. We got also Sebastian. I don't think I've seen you around these parts before, Sebastian. Your name makes me think of that little guy from Under the Sea. I can't stop doing it.
The crab or the
bears. I got the bears in my mind. I got the bears in my mind, friend, and that's you remember the Saturday Night Live. As a kid from Chicago, I got a biggest kick out of that. Bill Swirsky. I was like, Bill Swirsky. I think I had a teacher named Bill Swirsky.
Some Kowalskis.
Hey, breaking news, everybody. My birth name is not Knopf, which you see. That's my estranged stepfather's name I took when I was 10. So my birth name, I was a Malcheski.
There you go.
I'm Polish, Chicago, Czech, and Polish through and through.
Nice.
You got JJ saying "Go Birds."
Yes.
Who's the Dirty Birds? Dirty Birds is down
That's
there in
Atlanta.
Which
the Dirty Bird dance. The Dirty Bird.
Oh shit! I love this, Jack. I'll let you, man. I like you, Jack. You can call me Ross. I don't mind. Doesn't bother me. Windy City neighbor. Where are you from? Are you from the Windy City or nearby? Please let us know, because inquiring minds want to know. And JJ is in Philly. Look at this. He corrected himself. I know, Jack. I tease. Sometimes people do their voice to text, and it calls me that. So. All right, let's see. Get Simone Biles to play for them. That's because I don't remember his name. He's on the defense. I don't pay attention to defense that much, but look at this. He's another Packers fan. Jared, he's one of my shipmate friends. He was in the Navy as well.
Sorry for the loss, Jared.
Yeah. Dude, Dan.
Dividend dude. Yeah. What's up, buddy? My Google brother. He loves Google with me. Google is my largest single stock holding. And he is like fighting the good fight for Google, like on X, talking about why it's such a good opportunity right now.
They're about to go ex-dividend too. I threw them in the newsletter. And also, Dan, Dividend Dude Dan, you apparently showing that you don't understand the meaning of the word legend. So you might want to look that one up in the dictionary. That's okay. Let it slide. Oh, Ivan, my thoughts on MLPX. Well, Ivan, I don't know if you caught it, but I only happen to do a video and a newsletter about MLPX. But the short of it is EPD is included in MLPX. It is an ETF that gives you just qualified dividends. It doesn't give you a K1. So it's a way to invest in a lot of the midstream MLP companies that would normally issue a K1 without getting a K1. So I like it. I started a position this week in 25 shares, Ivan. And and some people have been confusing it with MPLX, which does issue a K1. So you got to watch that. Yeah, I know. Shamir, you guys got the CFL up there. I don't get that reference? Cosmo Kramer loves the CFL. Do you know what he's talking about?
I missed that episode where he talked about the CFL, but I love the CFL too.
You're Shamir, you're lost on me with that. So
I don't remember that one. I haven't watched all the Seinfelds though, which is cool because when I see the reruns, sometimes I'll catch a new one. Like it's awesome.
I love that show. I love that show. I wish my wife.
I've seen most of them now, but I didn't catch them all first run.
I'm not sure if we're catching this. Michael said if you amend, you raise the possibility of an audit. That might be on something else.
Because I mentioned that. I mentioned that I amend my taxes with the.
Oh, I got you.
Yeah.
All right. Well.
Yeah, that's possible.
There you go, Jim. I sold EPD and moved it to MLPX. I indeed did. So that's all right. John, the accent show or dividend show. It's Sunday night, man. Loosen up. Don't take me so seriously.
I love it when people call you Ross. I get a kick out of it.
I don't, whatever, man. I've been calling.
It does autocorrect though. Like I've typed in and had to change it back. It does autocorrect for Ross.
All right, Jim, the king of the dad joke says, what if the MLPs are in an IRA that you can no longer contribute to with outside money since Social Security is my primary source of income? I think it just still keeps the clock ticking on the cost basis of those shares. From what I've, again, we're not tax professionals. This is just my research, what I understand to be true and accurate is that, so you're talking, if it's in an IRA that you can't contribute to anymore, yeah, it doesn't matter, because even if you get the unrelated business taxable income, the UBTI, which I understand, like that is, if there's any kind of sales or anything like that, if the, I think the money passes through tax free if the energy, like an energy products partners, if it's kind of like REITs, right? They have to make that money related to real estate. Same thing with them. If it has to be in this narrow field, and anything outside of that is the UBTI. It's unrelated business taxable income. And if that's over $1,000, then you have to pay your ordinary income tax rate on that first dollar after. So again, it can get kind of, sorry, I'm reading John's comment. It can get a little confusing, and this is why some people just don't want to deal with it altogether.
Yeah.
But I mean, with the internet, and we can definitely figure out together. I'm sorry, I'm reading. This is hard, Craig, sometimes for people like me that have to read comments and try and finish a cogent thought.
It kills me. I love it. Russ. Now people are doing it on purpose.
Yeah, that's fine. Change my name to Russ. I don't know. Beautiful. You never know what you're going to get here. So you guys are talking Google. Tell me, Google, what do you love about Google? Give me your elevator pitch.
Oh, me? What I love too is it's really cool that like Dividend Dude and these guys on X, like they get right into the nitty gritty of all the fundamentals. I'm like high level fundamentals. And I mean, and that's one of the reasons why I'm big into ETFs, because I'm just not as smart as some of these guys that I haven't learned as much about it as some of these guys. I know a little, but I know enough to be dangerous. But what I know about Google is that I work in SEO, and I saw how easily they can make money, and it doesn't cost them extra. It doesn't cost them extra to put another ad out there. Like there's no, they're just charging for ads, like as much as they over and over again. And there's no extra work involved with putting that up there. It's just money. It's like creating. I mean,
capital light, very capital light.
Exactly. It's so capital. And that's just one part of their business. Then they've got YouTube. They've got the whole Android. They've got the cloud. They've got more information on all of us when it comes to AI. Like people are like, AI is eating their lunch. But the thing is, they'll be huge in AI. They haven't quite hit it right. But eventually, they have so much information. They have the most large model language data, like more than anybody else. They're going to be able to capitalize on that at some point. And we'll end up using their AI without even knowing we're using their AI. We already are. So to me, it's very high level. And again, it goes with my whole theory, the way I invest. I focus on ETFs. And then when I see big companies that I know really well, that I've followed for a while, that everybody knows, when they dip, I buy. And it's dipping, I'm buying. And it works. It might not always work. The past is not always going to happen in the future.
And a lot of you, there it is. A lot of you people, you probably already have a good sized position in Alphabet, in Google, because they are, I think I saw 30 or 35% the Mag 7 makeup of the S&P 500.
There's that too. Yeah, exactly.
Yeah, so, and that's the beauty of ETFs. So yes, I have Trevon. What's going on, man? He asked if we ever thought, or I've ever thought about buying LVMUY, which I think is a different, I thought it was, it's Louis Vuitton. I'm pretty sure that's Louis Vuitton. And yeah, I thought about it. I've looked into it. Couple of things that turned me off is the French taxation policy. So foreign government risk. I'm not that familiar with France and how their government operates and the tax laws. Also, it's an ADR. It's an American Depository Receipt. So you're not actually buying shares, ownership shares in the company. There is a bank that sponsors them. So you're essentially buying certificates that represent ownership in the bank. And that, I don't know, that kind of turns me off with the ADRs. I love to know that I'm investing directly in the bank. So, which I think is also why with the ADRs, you don't get any voting rights, which I know it doesn't make a big difference. But yeah, it's just great company, solid company, Louis Vuitton. And I think it was LUVM. I don't remember it, but LVMUY or LVMH might have been it. I don't know. That was one of the tickers. There was an H in there. Alan wants to know, how did you get that name? SCHD Stan.
Yeah, I just made it up because I love SCHD, and a crazy fan is a Stan. SCHD Stan from the Eminem video. You know Stan? Watch the Eminem video. You'll get it.
So dude, that's a great. So that's a really good song. I mean, that's a talent. Say what they want.
Yeah, the video is really cool.
He can see the check side of the Dapper Dividends. Well, look right. That was my first tattoo. I know you can't see it. This was for my grandfather, who was 100% check. Of course, it won't come in. That's fuzzy. It's the check. It's off the check coat of arms.
Yeah.
Yes, I got that when I was 21. My grandfather wasn't that happy, and he said, "Okay, no more. That's enough." And he made me promise him, though. He said, "Boy, don't ever get any tattoos below the elbow or above the neck," because he said that he had a friend who back in the day was tattooed up, and he said he always had to wear long sleeves because back when society wasn't so accepting of them, he said it was just hot, sweaty days, and he'd have full sleeves on because he didn't want people to see his tattoo sleeves. So that's that's why you'll never see that. Plus they're expensive now, and I lost my connection with my friend that did tattoos for free. So he wanted practice, and I'm like, hey, I got some open skin available. So thankfully it turned out well, and he was pretty talented. So I'd say 85% of my tattoos I didn't pay a thing for. I brought him like a case of beer, and he was like, that's plenty. Let's go.
Nice.
All right. Finishing up from earlier, Puckman's from Bradenton, Florida, just a bit south of Tampa. Nice.
It's beautiful over there.
Also tying another loose end. Kramer liking the CFL is from the Label Maker regifting episode. No kidding.
I gotta check that one out.
Kramer's. I did miss that. Dresh, we always like seeing you here, Dresh, from rural. He says rural Pennsylvania. He's out there with the Amish. What was that? Nathaniel Green, wasn't he the Fighting Quaker? I think he was from the Pennsylvania area. That's revolutionary time, people. Probably not going to get a lot of fanfare around here talking about nicknames of revolutionary, lesser known Revolutionary War heroes. But that's how I roll. Is
he a Steelers fan or an Eagles fan? Rural Pennsylvania. You never know.
You're talking about Nathaniel Green or
no, Dresh.
Wasn't Nathan Hale? No, he was in the I don't remember. I'm getting my.
Was it Dave Wanstead or remember?
Dave Wanstead. He had a nice mustache. Around here we rank coaches based on their mustaches. Jim Betsy's he has his uncle Guido do his taxes. Look at this, Jim. Always good for a laugh, Jim. I love it. John also. All right, too much football here. Talk will people outside of Rockford. Nice. I do work over there sometime. All right, let's see.
East of the Ross.
Frank's talking about massive ad revenue and the ability to make big share buybacks. Yeah, big share buybacks are awesome. Yeah, they're awesome because they increase your ownership in the business without you having to do anything else. With the caveat, as my dear, I wanted to say friend, dear departed friend Charlie Munger used to say, as long as they weren't bought over intrinsic value, because then you're destroying shareholder value. So you'll see it a lot, though. There's a lot of, all-time highs. Something could be egregiously overvalued and they're buying back shares. But also with the share buybacks, Frank, there are a few websites that will show you where you can find out if it's a net buyback, because sometimes a company will issue a bunch of stock options and restricted stock units, and then they'll buy those back. So the net shares won't decrease. It'll kind of stay flat. So we want to see.
But at least they aren't going up if they're doing that, though. At least they're not diluting us. They're evening it out.
It's right. It's better. But it's almost the way then that they're, I guess, kind of transferring wealth to the to the C-suite and people inside the business and not to the shareholders. Google's getting hammered in the courts with it more. And I have been paying attention to that. What are your thoughts? Do you think that they're going to have antitrust? Do you think they're going to be broken apart?
Well, I think here's the thing. I think if they get broken apart, they're worth more. Like usually when a company gets broken apart, when they're tied all those businesses together, you kind of get a discount for buying the bundle. But if you separate them out, if you take YouTube out, like that's $1 billion business here. You take this other, the Google phones, the Android software and all that, that's probably another $1 billion. I don't know for certain, but those are all huge businesses on their own. That's more value for us because we're going to get those shares of those companies too. So that's not a bad thing for shareholders usually on a good company. So I've got no problem with that. And then a lot of times these things just pass over and they're not that big of a deal. Like even if they get fined, it's like pocket change to them and they just move on and we'll forget all about it. I said it, I watched one of our I think the first time we talked, like March last year, I think it was. And I talked about how so many times it's bad news. It sounds so bad at the time, but then we don't even remember it like months later, much less years later. Like, it's like, what was that? Oh yeah, that was nothing. Like the debt ceiling. Remember the debt ceiling was big? Ah,
yeah.
Who cares?
Well, and that's human nature, man. Human nature. And that's why the whole, if it bleeds, it leads. And you've got the hyper news cycle. You've got everybody creating content. Hey, we feed the beast too. But honestly, if the bear porn rules all, people, us as human beings, we want to know what's bad more than what's good, because what's bad could be really bad. But if you say, hey, something good, if you're kind of happy where you're at and something really good, but if you got something bad coming, you really want to know about it. So,
yeah. Oh, the other thing about Google, they have one of the things against them is they're saying they've paid to be the default browser on Apple. They're paying like $20 billion.
Right. It's crazy.
Oh, so we have to stop that? You're making us stop? Okay. Now we have 20 billion extra dollars. And people are still going to go back to using Google. If Bing is the default on Apple, most people, the first thing they do when they get that Bing going, they're going to they're going to Bing Google. I can't even call it Binging. They're going to Bing it. Well, what is this? They're going to Bing Google and put Google back.
Yeah. When you hit a verb status, when you Google something, come on, that's like when you need to use a Kleenex. I mean that's where it's at. You made me think of it being worth potentially broken apart more than together, and that's why John D. Rockefeller was excited when they decided to break apart Standard Oil, because he knew that it was going to be a good thing. And I guess it'd be kind of like Voltron, remember Voltron? Yeah. So it'd be like if each piece was worth, I don't know, $2, and when you put them together, how many were there? Five
lines. Dude, that was my greatest Christmas ever when I got the full metal Voltron. They were the knockoff. It was the knockoff, but it didn't matter.
So that would be like each of the 5 pieces being worth $2, and then you put it together and it's selling for $8. But if you break it apart, it's worth 10. So that's kind of like what we're talking about when sometimes these businesses get broken up and they're worth more when they're broken apart.
Shout out to Voltron. What a great show.
Go dude. I'm a kid of the 80s too.
Hey, there's my guy. I love this guy, Ryan
Day. I was on their show once. They're Cash Flow Kings. So
they're hilarious, man. Hilarious. I started watching the show more after I was on it, but now I watch it. I'll just leave it on playing. It's hilarious. It's good.
It was a good time. Mm-hmm. Google knows too much about Jim, so he can sit here and eat a gas station burrito. That's the price you pay, Jim. You shouldn't be eating those gas station burritos, But I like you, Jim. You are my friend. Much like buying BTI if you're from outside the UK. That's lost on me right now. I don't remember what you're referring to, Shamir. High Tech wants to know, will I invest in a Bitcoin ETF? I'm not going to. I understand it, but I still don't know the use case for it right now. And for me personally, there's no cash flow to it. I have a little bit of crypto, but I don't know. I got burned pretty good with Celsius going after my crypto dividends, if anyone remembers that back in the day. And that was unfortunate, but
dark times.
It was. So I don't know. I think I had maybe like 3 or 4,000 invested in Bitcoin. I got a fraction of it back. So
That
whatever.
sucks.
You live, you learn. But that's the beautiful thing about money, right? You can always make the money back.
Yeah, I was on a run when I saw a headline about all that nonsense going down with FTX, and I didn't have FTX, but I used some other. I was, staking it for like 10% or something, and I knew that was too good to be true. The moment I saw a headline about FTX, I stopped while I was running, got on my phone, and pulled my money out. And they tweeted out, who was it? I can't remember the name of it off the top of my head. But they tweeted out, "We're fine, everything's cool here. Don't worry, nothing to see." And I'm like, I'm out. And then 2 days later, they announced they were going bankrupt and they're shutting things down, and people couldn't access their accounts. But I had already put my stuff through it, and I got it out like the last second. I was so happy.
Good for you, man. Good for you.
So lucky.
Look at Shamir. He thought SCHD Stan was a country in the Soviet Union. That you're talking about those satellite countries. There's a lot of stands. There's Kyrgyzstan.
That's hilarious.
Yeah, Kazakhstan. I don't know all the stands. How many stands there are? Look at it. Yeah, that's what we do around here. We're keeping the tats. I guess I should do some news, man. It's Jesus criminy. This goes fast. We'll do some. I think, did I say Nathaniel Green? I don't remember what I said for.
You said a lot of names.
Michael. Yeah, Michael, tell me, was I wrong? I can't even remember what I said, but I know he was the Fighting Quaker, right? That's what they nicknamed him. That's cool, dude. That's like an awesome sports team name, the Fighting Quaker. Yeah. I don't know, Mad Anthony Wayne. I love this. I'm going to have to, I love it, man. I'm going to have to do some of that. Oh, look at this. WW34. What's up, man? My wife has roots in Peoria. That's where she grew up as a kid. And they got out there. All right, so another Saturday Night Live reference, Father Guido Sarducci, which I corrected the spelling for you, right? Don't ask me to spell it, but all right. I think we can do some news. Who scored for the Lions, Pat? Let us know. We need to know if it was Jahmyr Gibbs.
Mm-hmm.
Was it? Do you know?
No, I don't know. I'm not following.
You're just getting me all excited, man.
No. I was just saying I would like that too. I need that.
Yeah, Whiskey Tango. The object of breaking up a monopoly is to introduce competition and lower prices. Well,
yeah.
That's the thought, but it doesn't always work out like that. Which of the Voltron lions is the most valuable? I don't remember, man. I barely remembered that there was 5 of them. I'm surprised I pulled that out. ETF DIVB. I have not heard of DIVB.
Yeah, I know it. It's a buyback ETF. I invested in it. I've invested in everything. I know. Tried it all.
Now that would be interesting. Sometimes you can look for ideas by looking at the top holdings of some of these ETFs to see what they're.
Yeah, it's a good one. It's done really well. It's even it's kept up very well with the S&P, and sometimes it beats it. It's good. I invested in another buyback ETF. It's actively managed called SYLD, and it's gone back and forth. Like right now is down a bit, but every time it goes down, it pops up nicely later. And there's been a lot of times where it's beat the S&P. Right now, it's not. It's had a rough few months, but it's solid. That's but DivB is a good one too. DivB is a lot more similar to the S&P than I think the one I'm in, SYLD.
I'm gonna want to see what they have. Oh, I got us covering here. Let me do this. I know everybody. It's not as big is the word I think I was looking for. I could do this. Anyway, Seeking Alpha. I don't know if this is a free article they do, but every Sunday they put out the week ahead, and it just gives a little preview of what they got going down. We got the August CPI report, the August PPI. So remember, the consumer price index is a lagging indicator, and it's backward looking, and the producer price index is a forward looking indicator. So we're getting from producers what they're paying for things, and if things are going up or coming down. So that'll be interesting. And then September 19th might be when we get that 25-point cut. But it's gonna happen. It's happening.
That's the Talk Pirate Day, I think.
It's the what day?
Talk Pirate Day.
What is that? I still can't hear you say it again.
Talking Pirate Day. Pirates, like R, matey.
Yeah.
Yeah.
I don't.
September 19th.
I don't know what you said. I feel like I'm insane.
Don't worry about it.
Spell it. No, spell that first word because they'll eat away at me.
Pirates. Like
just pirate? I thought you said puck pirate.
No, Pirate Day, like a pirate.
Just the pirate.
Speak Pirate Day, like our matey,
Quizás dime en español, es más fácil.
No.
I said maybe tell me in Spanish. It's more easy.
Beaucoup de français.
No entiendo francés. No. Anyway, it goes off the rails quick. I love it. I like having laughs. I don't take things too seriously. Anyway, so here earnings we got from Oracle, Kroger, Adobe, GameStop. That'll be a fun one. Apple. Apple's holding its annual iPhone event. There you go. So they'll probably introduce something. Then anyway,
fun.
So that's it. Where we were looking up DIVB. I want to just see the top.
While you're looking that up, it's called International Talk Like a Pirate Day. September 19th.
Talk like a pirate. Yeah.
Yeah.
I gotcha. That's the part I couldn't hear.
I said speak like a pirate.
I gotcha.
I watched too much football today, man. I'm burnt.
Hey, that's what Sundays are for. Expense ratio 0.05%, so that's pretty damn low. What else we got here? This is looking interesting, man. I'm surprisingly never heard of it.
It's had a great year. It's had a really good year.
It's up buy rating from the 2%. Quant. Dividends get an A. Look at this, everybody. Let's see what some of their top holdings are. Sorry if this is making you dizzy. Tech. All right. So top on the left there. All right, we're not covering up. Cisco, IBM, Accenture, Texas Instruments, Exxon, JP Morgan, Chevron, Verizon, J&J, and Fidelity. All right. Interesting, man. I'm going to have to... what's the yield on that? I think
The yield's barely, like it's a 1 point, like high 2s, I think.
We'll come back to
low 2.
Yeah, 2.7. When was it incepted? It was born
2017. I'm going to say November 2017. That's my guess.
Yeah, from iShares. Look at that.
Is that right?
That's really fast dividend growth lately. All right, interesting. And it is March, June, October, and December payments. All right, so here it is, everybody. The news. What was Monday? Monday was... There we go. This is our first bit of news. And this is just Simply Safe Dividends. It's fun to share this. Makes it a little... breaks up the show. So Dollar General, they downgraded from 60 to 50, borderline safe. Yeah, the dollar stores. Then Dollar Tree also got whacked. Their share price down almost 20%. They refreshed their outlook on Archer Daniels, which is an 80 safe. I got too big there. Keep that on one screen. Verizon with a token raise of paltry 1.9%.
Hey, they've been doing well. They've been doing well lately.
They're on them, don't you?
What's that?
You're still invested in Verizon, right?
Yeah, I sold a lot of it. I have a little bit left. And then, of course, it's one of the top holdings in SCHD, too. So they've had a good year. They beat the S&P over the last year or 6 months. I can't remember what it is. So they're doing all right now. Yeah, they're not going to go much higher, probably, but they've had a good year.
Yeah. Clear. And by the way, a lot of the telecoms don't do well if you're newer watching this because it's highly competitive industry and they have to, it's highly capital intensive, probably the opposite of what you were talking about with Google. So they have to spend a ton of money all the time. And then paying out a dividend, it just drags. It makes it hard for them to grow a lot. But yeah, anyway, Clearway Energy, don't know Clearway, down from 60 to 50. Vici, I bought 5 more shares, raised their dividend 4.2%. Not crazy, but it's still beat inflation currently.
They're solid, man.
I do.
I bought a lot more Vici lately before this up.
Yeah,
recent rise.
Yeah, it just won't stop, man. It won't stop. Broadcom raised their dividend 0.95%. So 14th consecutive year. They've been blowing up crazy. TC Energy, aren't they in Canada? I think
they are. Yeah.
Yeah, TC Energy. What did they do? Oh, they're spinning off their oil pipeline business in October. Huh. And dividend
That's in
investors
that,
will be kept whole.
that's in that ETF that you were talking about earlier. They're in there big.
I thought I saw it.
Yeah.
And then this one is also Kinder Morgan. They refreshed. We just make up words here. They refreshed their outlook on Kinder Morgan. So ticker KMI. And that's a little bit of news there. And let me get to some more of your comments. Well, I guess I should have done what I bought. For any of those that don't know, I have a link below, or you can go to DapperDividends.com to just sign up for the newsletter. And this is what it looks like. I pretty much retold all the story about my my EPD journey in investing in the Global X MLP and Energy Infrastructure ETF, ticker MLPX. And there you go, TC Energy. They are the fourth largest holding. I had to count there. Counting's hard. But I did share this over the last 10 years. I know this is really small for a lot of you watching, but EPD has underperformed MLPX by 10% on a total return basis over the last 10 years. So very interesting. But anyway, real quick, I received one dividend this week. It was from Visa, $14.50. And there's the 250. I sold 250 shares of EPD, as we've hashed over. And then I bought 1,000 more shares of the Schwab Value Advantage Money Fund. You know, it's just, it pays more than a money market. It's invested in treasuries, a little over 5% yield, I think is what it was. 2 shares of Nike, 2 shares of Agree Realty, 5 shares of Vici, and then there's the 25 MLPX shares. So that's what I did. And what did you buy this week? Anything interesting?
Yeah. Did you put all that money to work right away? Did you hold any back?
No, I've across my portfolios, I have about 15,000 in cash. So it's
always
deciding.
Interesting.
So I got 5,000 in SWVXX till I hopefully.
Right, that's there too.
I never want to hope for a market crash, but if it did have a significant pullback, I wouldn't be. I wouldn't
September, October, man, this is usually the time. If it's going to happen, the last couple of years, this one has happened, and historically, this is when the worst month for the market. So, if you're going to time, this is the time. But yeah, so I've been buying because things are going down. Like growth is down when dividends are up. So I've been buying growth. I've been buying SCHG, the growth version, which is really cool because it does all the work for you, and it looks for like SCHD screens for the healthy fundamentals so that they can pay growing dividends, right? SCHG looks at fundamentals of growth companies, so it's always trying to find the fastest, the biggest big companies that are growing fast. And it's cool that they're using those filters and doing that work for you. So they do a great job of finding that stuff. You don't have to find the next big growth stock. It's probably going to be in there already. So you're going to capture that winner all the time. So why have to choose if it's who's the next NVIDIA? It'll probably be in there already, or eventually it will be in there and you'll get that gain from it. So SCHG is a nice one. And then, like I said, I've been buying Google. And because of NVIDIA and the chip stocks being down right now, I've been buying some more SMH. And then I'm always buying, like every day I buy some FDVV, some DGRO. And then I even started buying SCHD, which I haven't bought, SCHD. I haven't bought it in a while. And actually I bought like 4 or 5 shares this week. So on a little bit of a dip. So yeah, and then I also started another one. I think you've heard of David Bahnsen. I've heard you talk
Dividend
about him
Cafe.
I really like him. I read his book. He has a great book about dividends, and he has an actively managed fund called TBG, and I bought some of that, and it's done really well. It's and like you can't see the full stats on it because it's very new, so it's a little speculative just in that sense that it's new. But if you look at its holdings, they're really strong. And if you look at the growth, the dividend growth of those holdings, it's there. It's got a good starting yield. You are paying a higher expense ratio because it's actively managed. But I really like the way he manages things. And so like I feel good about putting some money in that. So And then SYLD, which I talked about before, is a buyback ETF. I'm always buying a little bit.
Is that a shareholder yield? Is that
That's
what's his? Oh my gosh! I
oh
like
shoot,
him.
I'm drawing a blank too.
Yeah, I can't think of. He's
Meb Faber.
Meb Faber. He has a podcast too. Yeah.
Yeah, he runs that Cambria. It's Cambria's his company, and that one's really interesting because it's got all stocks that I would never buy on my own. But he's doing all the screening for fundamentals and buybacks, and they look at a combination between buyback and dividend, and they try to capture the companies that are basically returning the most to shareholders. And then he looks a little bit at momentum, he looks at value, all this. He's doing all that stuff. And so I just like to buy it and see what happens, and it's really worked out. I've been buying it for 2-3 years, and it's been good to me too.
Yeah, I just found out about it earlier this year, and it's been on my watch list, but I don't know.
Yeah, it's another one with a higher expense ratio, so that turns off a lot of people. But I don't put as much money into those, but I don't know. It just feels good to have some of these smart guys kind of looking at things, a nice fallback. So some of the other stuff I'm doing isn't working, maybe that will. So I like to have, even if it's ETFs, like diversifying my ETFs, which a lot of people say, well, I have multiple ETFs, but they all have different strategies and methodologies. So I don't see any problem with having multiple.
All right, we're going to go fast here, get caught up. And also remember, everybody, when you buy an ETF, you're buying the methodology that's picking. You're not really even buying the underlying stocks. You're buying the methodology because, as we saw with SCHD, things change.
That's Danny. That was Danny. What's up, Danny?
Yes, one of your favorite fellow runners up there.
Yeah.
Opinions on preferreds, please. Honestly, I've done very little research into preferreds, and from what I understand is you don't have the upside of the just like common stock, common equity. You don't have the upside, which is more risk, but then you're not first in line with like the bondholders in the event of like a liquidity crisis or if they have to liquidate the company. Yeah, so it's like a middle area, and I don't know.
And I thought they'd have a lot more downside protection. So like I owned one PEFX or something like that, and it had a great yield. So I'm like, this is a great place to kind of store cash and get a higher yield than you could get on cash, especially at that time. And then when there was a downturn, I think in 2021, at the end of 21, 22, it died. It got killed. I'm like, what's the point of this? This is not good. And it doesn't go up. It was just stayed flat. And then you got the yield, and that was it. And then it died. Yeah. I'm like, this is not. I sold. I'm out.
I guess my final thought on preferreds would be you're really just looking to. It's a kind of a bet that the company's going to stay in business because you're not really that worried much about the share price. You're only worried about the yield because I think the preferred shareholders get paid before the common equity stockholders. Yeah. But if there was if they had to liquidate the company, then you're second or third in line. I forget.
Yeah, so they might where they might work. They might work well on a company that the company is good, and the company's solid.
So Warren Buffett did that with Harley Davidson. I remember, and I think it was.
Didn't he have Bank of America? Bank of America preferred.
I don't know if he did the. Yeah, I don't remember if he did preferreds. He could have. The only one that sticks out in my mind is the Harley Davidson.
You've read all the letters. You're the man. You're the man.
I'm actually working through the letters. I listened to all the shareholder meetings since '94 twice. But so his only question was, do I think Harley Davidson is going to not go out of business? And he confidently said, I don't think they're going to go out of business because they have such loyal customers that they tattoo the logo of the company on their body. So
exactly.
All right, let's see. Beautiful, Pat. So that's a while ago.
Nice.
Got the TD. That's going to help me. I'm in a close one.
Me too.
Div B is small, focus on shareholder yield, dividends plus buybacks. All right, so MLPX and chill. That's what I'm going to do. I'm planning on holding it in the retirement account. I'm going to get to 100 shares. I'm going to dribble in a little every week, but 100 is my threshold, and then I'll just sit on that there. And then Alan's using SCHD's requirements to put together his own system for analyzing securities. Yeah, you can do that too.
There's a guy on YouTube who did that. I can't remember his name. He's really good though. He made his own portfolio, looking outside of not just what SCHD looked at, and it's performed really well using their fundamental the same screens that SCHD uses.
Oh, dude, I love it. So I wanted to say that, is Adobe hated right now? I don't know. I haven't really followed them that much.
Stock's doing well.
I don't know, but Whiskey Tango Foxtrot, man, I love T2. I love it. And yeah, Skynet. I should have worn my Skynet shirt. Becomes August 29th, 2024. That's fun. I didn't realize that was
nice.
the date. We just passed.
I've been watching rewatching some of the old Terminators and watching like the YouTube, like to try to sort out the timeline, because things keep moving around now too, right? Because they go back and then they go, and then it changes the future, and then they go back again and change the future again. So yeah, who knows anymore? We
saw Beetlejuice in the theater yesterday. I took my family. It was all right. I think my expectations were a lot higher because of the first one. I love the first one, but actually, when we were in the lobby getting our popcorn, two things jumped out. One was that the theater we went to was in Elk Grove Village, Illinois. It's a Classic Cinemas, and they're going to have they had like a year, 1984, and one of the films was Terminator, the original. But better than that, on October 19th, I don't know if I'll be there on that day, but they're going to be showing Return of the Living Dead from 1986.
Oh, I love it.
That is one of my all-time favorite movies. And I was a kid when I watched it on my friend's mom's Betamax. Not many remember Betamax, but we weren't supposed to watch it. Gave me nightmares. That's when I fell in love with the zombie genre.
Yeah.
And it was just...
I love the old black and white one from like the 60s, the original.
Yeah, the original one, Night of the Living Dead. Yeah, that was the George Romero. That was
so good.
The first one, and that was all
so good.
You know, he never secured the rights to that. So talk about a legal snafu, and that's why anybody's been able to make it, do whatever they want with it. It's crazy, yeah. Alan uses Affinity instead of Adobe. That's a little bit over my head. Tony hopes that SCHD keeps dropping for the drip. Hey, and that's the beautiful thing about dripping, is that it automatically forces you to buy more shares when the price is low and less shares when the price is high. So it's kind of a cool little wrinkle in that. Michael, Mr. Swami G, said that DivB's dividend compound annual growth rate is skewed by the last year's dividend growth, which was very high. Hey, it's still, look at this guy. Why is pirating so addictive? They say once you lose your first hand, you get hooked. Yeah, Jim. I love it. Boo Broadcom can do better 1%. I think so. But some of these companies, they don't care about you and your dividends. They're
but it could tell you something about the future, what they're seeing in the future, right? They're looking at what's happening. It might not, but
yeah, we saw that with 3M, man. 3M really just went to a penny a year, or 4 cents, penny per quarter, 4 cents a year, just minute raises. Vici might get hammered in a tough recession. A lot will get hammered in a tough recession, but I think the beautiful thing about companies like Vici is they're contractually tied in to these to the tenants. So even if the tenant is bringing in no money, they still have to pay their rent. So that good and bad. So as long as the tenants don't go under, then Vici's going to be just fine. So that's
they got all their payments during the shutdowns and all that. They got paid. They what was it? 99% of their tenants were paying.
Right. So that's interesting. So honestly, though, if we start seeing some of these major casino operators go under, then I think it's going to be tough for everybody. So that's KMI is a pipeline company with no K1. Interesting. Yeah, I don't think they all did, but. Yeah, Shamir. So I fired off the newsletter, finished watching the Bears, and then we went on a hike, like a 3-mile hike with my family, swung by Costco, got some food, came back, hopped on this. So I do need to get to them. And then Jim, I love when you guys respond, and my goal is within 24 hours to respond to them. So that's usually what I do. Alan's planning on buying SCHD. Hey, so with SCHG, do you Any concerns with it being a lot of overlap at the top with like the S&P 500, or do you not mind?
No, I don't mind, because to me, you're kind of doubling down on the good stuff. It's like you're capturing more of that, even more of the top stocks. So, I mean, no, because I'm not worried about the top S&P companies. Like, I'm not worried about those. No, I'm just not. Like, it's in the long run, it'll work out. And what's nice is if Apple were to slow down, if Nvidia slows down, Tesla slows down, somebody else is going to come up and replace them. So it all works out in the long run. That's a good question. SCHD, why not VUG? And I've looked into both, and they're very similar. It's like, pick what you want, but I think SCHD uses more fundamental screens than VUG. I'm not positive. All I know is VUG, when I looked into it, SCHD was really outperforming them when I picked SCHD. And I'm not positive about the screen the methodology that VUG uses, but I believe it's more basic.
Yeah, good. Yeah, I haven't really looked at VUG though, so I'm sure they're similar.
They're very similar. They're both large cap growth. They're both going after. It's similar to the performance that you're going to get with the Qs, the triple Qs. It's like the NASDAQ 100. Similar, but different, but similar.
Yeah, Whiskey Tango, good point. Warren does get deals not available to the serfs, to the plebs, the plebeians, of course. That's what happens, man. That is what happens. And then Broadcom announced a dividend adjustment, not a raise. Oh, really? Okay, that's interesting. Love that. I hadn't looked into that. And it is because of the split. All right. Well, then it's us. Okay, well, then maybe they will give a higher one. So, hey, I guess.
Hey, Russ, did you see my SCHD dividend prediction?
No, I did not.
So I made a prediction, and
what is it?
And it was based on, I went through every holding. I did this last time too, and it was pretty close actually. I was actually really close because everybody else was saying, we thought kind of the low raises were going to continue, and I said no, I've gone through it. Like, actually, I didn't say I've gone through it. I just knew it was going to be higher. I'm telling people this is going to be nice. You guys are going to be surprised. And it was even higher than I thought because there was a supplemental dividend on top of the payment. So I was still pretty close because we don't know what that supplemental dividend was. So I guessed 77 cents and it was 82. So this time, again, I went through it all, looked at the weightings, looked at what every holding pays. And again, I think it's going to come in the 77, 78 cent range again. So that's like an 18% increase. 18.5% increase over last Q3. So it looks like it's going to be good again.
I'll take it, man. I'll take it. Heck yeah. We'll hold you to it, man. We'll bring it back on and say, what the hell happened?
Mark it down. Write it down. 77.63. Write it down.
I don't invest in QQQM. Do you?
I have a little bit, for my kids. It's the QQQ, but it's like a cheaper expense ratio. It's exactly the same as QQQ. So if you're if you're going to buy one, if you're starting fresh, go QQQM because the expense ratio is lower and it's the exact same thing.
What is the QQQs for? Is that more for trading or I don't even know.
Exactly. Yeah.
So the
QQQM is newer. They made it to get a lower expense ratio, and they're like, well, let's not change what we've already got going. Let's just make a new one. And so, the ones that have the higher expense, the QQQs, get better premiums on selling covered calls, that sort of thing.
And John thanks me for shopping at Costco. What was that? Hold on. Costco? You mean this place?
Welcome to Costco. I love you. Welcome to Costco. I love you.
That's the Costco of the future that I believe in. I have a dream that we will be able to have a Costco where we can take a train to the far end of the building. To the time machine. I think that's what it was with they wanted to go to the time machine, right? And he's like, if we take the train, we can be there in an hour. My kids love that. How in the future it's just this ginormous store. There you go, Michael. Also, QQQ if you want to trade options.
Right. Yeah, that's what I was getting at. Yeah. Same thing with
Frank.
SPY. Same thing with SPY and like the difference between SPY and VOO, right?
Mm-hmm.
Trading options is better with SPY. There you go. Yeah.
Very good. Well, freaking heck, man, we made it. I love it. And look at that, all 82 of you. Beautiful, wonderful people. So what do you got going on? What are you looking at this week? What are you thinking about doing?
Well, I'm really interested to see if this, this dip continues, how far it goes. But I'm not waiting. Like I'm buying, nibbling every day a little bit, because you never know when it's going to turn around. And what I'm always doing is, like, we've talked about it before, I have way too many stocks. So I'm selling stocks I don't love and moving it into ETFs that I do love. So yeah, if it's more of a growth thing, I'm selling it and moving it into SCHD. And I invest every 2 weeks into the S&P. So that's happening no matter what, right? So in my individual accounts, I'm focusing on dividend growth, and I'm focusing on SCHG and some of the bigger companies that when they dip, like Google right now. So yeah, I'm continuing to look at Google, SMH, SCHD, and the other dividend growth ETFs that I've been following, FDVV and DGRO.
Beautiful. Get that dividend growth, man. And it just came to my attention that, well, it's by me. I completely forgot, man. They commandeered or recommandeered my candle. I usually go upstairs and grab one. I think I got that one from I got that from my daughter's room. So yeah. So then I got the little lantern that my wife gave me. But we'll end the show with I don't know, goofy stuff around here. But man, Craig, thank you so much. SCHD Stan, the one, the only. Catch him on X. And yeah, what do you want to tell people where they can get you? I guess I just did.
Yeah, I've really, in this last week, I think I've really stepped it up on X, Twitter. I'm tweeting a lot more. Still not a ton. I'm not going to bombard you, but it's all laser focused on SCHD and like the world of investing through the eyes of an SCHD investor. So it's something I made for fun, and it's really grown a lot. And we have a lot of fun in the community. And check it out at SCHD ETF on X. And yeah, I hope to see you there. We can talk on Twitter, X, whatever you want to call it.
Beautiful. All right, everybody. We're going to catch the end of this Lions and Rams game. So, hey, thank you again, Craig. Thank you, everyone, for watching, stopping by. We're both kids of the 80s, and Pee-wee, God rest his soul, is going to take us out. So, seriously, thank you for watching, and I'll talk to you guys in the next one.
Thanks, Russ. Peace.